You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 7th day of July, 2025. Hope you had a great long holiday weekend. Happy 4th. Well, happy 7th now. But I trust you did. Thanks for joining us today. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast is our live training room. So that one is reserved for members only, those who are taking our 1-week free trial. If you have not yet taken your 1-week free trial, when Michael joins us at the top of the hour, he'll walk you through it step by step, a couple times. We'll get your indicators up and indicating today. The trial will officially start tomorrow and will run all the way through next Monday. 5 consecutive trading days. The weekend does not count against you. And when you take the trial, you're not just getting access to the live training room. You get access to everything. The indicators, the alerts, the discussion groups and Telegram, everything. We treat you just like you were already a member, a passport holder, for 5 consecutive trading days with no credit card required. We want you to focus on what's being taught, so at the end of the week, you can make a well-informed, intelligent decision whether or not trading is right for you. When the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and then come back for this broadcast, the noon broadcast, which is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go here to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click that link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day you'll get an email about an hour before this broadcast starts. In the email, there'll be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit of doing it that way is you have immediate access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. And some days you'll be busy, so you can't join live, but you'll want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. We are celebrating our 20th year anniversary. But you don't have to remember all that. Just remember this: youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 2,000 800 daily episodes archived for your educational and viewing pleasure. And if you're new to our little corner of the world, it's a great way to get to know who we really are. And thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to, but it's a great resource to have at your fingertips. And again, it lets you see how we've evolved over the years. youtube.com/CFRN. This is the schedule for each afternoon broadcast. Michael will be joining us top of the hour for a recap of what happened in the live training room this morning. Then we'll do some live trading on the TradingView platform. But for now, we're going to dive into our daily devotional, which is where we start each and every day. Now, the topic that we're on, and we're on day 8 of 10, the holy hustle. Our scripture today, 1 Corinthians chapter 12, verses 14 through 16. And I'm going to share it with you from the NIV translation. Even so, the body is not made up of one part, but of many. Now if the foot should say, because I'm not a hand, I do not belong to the body, it would not for that reason stop being part of the body. And if the ear should say, because I'm not an eye, I do not belong to the body, it would not for that reason stop being part of the body. If the whole body were an eye, where would the sense of hearing be? If the whole body were an ear, where would the sense of smell be? But in fact, God has placed the parts in the body, every one of them, just as He wanted them to be. If they were all one part, where would the body be? As it is, there are many parts, but one body. The eye cannot say to the hand, I don't need you, and the head cannot say to the feet, I don't need you. On the contrary, those parts of the body that seem to be weaker or indispensable, and the parts that we think are less honorable, we treat with special honor. And the parts that are unpresentable are treated with special modesty, while our presentable parts need no special treatment. But God has put the body together, giving great honor to the parts that lacked it, so that there should be no division in the body, but that its parts should have equal concern for each other. If one part suffers, every part suffers with it. If one part is honored, every part rejoices with it. Again, that was 1 Corinthians chapter 12, verses 14 through 26. The holy hustle. Now, what is that? It's embracing a work hard, rest well life. It takes a village, not only to raise a child, but to turn our ordinary hustle into something holy and glorifying to God. Comparison, competition, community. When I look at the bossy messages of hustle the world screams at us, comparison means proving to our audience why they should choose us instead of our competitors. Competition means striving ceaselessly to ensure our product, work, or words are not only the best, but the most unique and available before anyone else's. It screams, I was here first. And community? Well, that's just a nice word for customers who become the targets of our advertising, marketing, and email newsletters. After being in marketing and sales my whole life, I get it. My brain tends to fall back into those same definitions when I forget the true purpose behind my work. Instead of serving, I start selling. And in the process, I value profits over people. But there is a different way. In a holy hustle economy, comparison means looking at our own work and asking God to show us how it does or does not line up with His will. How do our lives compare to the life of Christ we're meant to model? Competition isn't about making sure we win, but looking for ways to help others rise, outdoing them in honor. And community is the essential ingredient that sets holy hustle apart from the way the rest of the world works. It looks more like collaboration, care, and conversation rather than just targeting customers. It might be messy, but community is always worth the hard work. God didn't create us to live life alone, and that applies to our work too. We can do so much more for God's kingdom when we stop competing and start collaborating. Following the loud, clanging demands and expectations of the world will only make us feel insecure as we compare our place in God's plan to those around us. Let's instead choose to trust God as the master craftsman who knows when, how, and why, and which pieces to use to make something beautiful and secure that will last a lifetime. Become captivated by God's purpose in your life and lean into the work hard, rest well, and live the life of the holy hustle God has called you to, right where you are. Let's pray. Heavenly Father, thank you for making us one body in Christ. Though we are many parts, we each have a purpose and a place. Help us to value one another, to celebrate together, and to carry each other's burdens. Let there be no division among us, but only unity, love, and mutual care. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen and happy Monday. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is down 357 points, almost 1%. Nasdaq's down 119. S&P 500 is down 37. And the Russell 2000, our man in the street, is down 25 points. That's well over 1%. In the commodity basket, crude oil is up 58 cents, trading 67.58 last. That's a gain of almost 1%. Gold down $11.50, trading 33.3140 last. Silver down 20 cents, trading 36.88 last. In the Asian markets at the close, the Nikkei fell 223 points. The Shanghai gained almost a point. The Hang Seng fell 28. And in the European markets at the close, FTSE down 16. The DAX up 286, almost 1.25%. And the CAC up 27. So we had a mixed day in Asia. It was a mixed day for the UK. But at the moment, it is a big red Radio Monday here in the US of A. Last week I kept talking about, I think we're at the turning point. I think we're at the turning point. But historically, we rally into a holiday weekend, especially the 4th of July. And so we did. But I think the turning point is here. And when we go to the charts, you'll see it. All right, global news first. And this is very sad. At least 80 people, including 28 children, have died from historic flash flooding in central Texas over the weekend. At least 10 girls and one counselor are still missing from Camp Mystic, a Christian all-girls summer camp. Camp Mystic is located in an area alongside the Guadalupe River, also known as Flash Flood Alley, due to the soil's inability to absorb water quickly. The century-old camp was hosting roughly 750 children when a storm began dropping several inches of rain per hour late Thursday night. River waters, fueled by moisture in the air, rose 26 feet within 45 minutes, shortly before daybreak Friday, the equivalent of months' worth of rain in 45 minutes. Over 850 people were rescued within the first 36 hours of the search, including residents of other camps and people living in nearby localities. It is unclear why camp residents were not evacuated or whether they had received advance notice. And as the story has developed, there was some advance notice. So our hearts and our thoughts and our prayers are with everyone in Texas right now. Moving on. Billionaire Elon Musk said Saturday he has formed a political party, the America Party, to challenge the dominant two-party system in the U.S. It's not clear who will lead the party, which has not been registered with the Federal Election Commission as of this writing. Elon's announcement comes after President Donald Trump signed his sweeping domestic policy bill into law Friday, a long-standing point of contention between the two former allies. Musk has publicly taken issue with the bill over its projected addition of at least $3.3 trillion to the nation's ballooning $36.2 trillion debt. The bill notably does not include subsidies for electric vehicles like those produced by Musk-owned Tesla. So it's not too hard to connect the dots on that, is it? Musk says the America Party will target 2 to 3 Senate seats and 8 to 10 House seats, enough to serve as a caucus and contentious bills moving forward. Musk was the single largest political donor in the 2024 presidential election cycle, contributing over $290 million to Trump and other Republican candidates. Well, when you put your hand in a man's pocket, like Trump did with Musk, this is what happens. You get their attention. The Prince of Darkness bids farewell. No, not Elon. More than 45,000 people turned out in Birmingham, England over the weekend to watch legendary rocker Ozzy Osbourne appear for a final time with his band Black Sabbath. The 76-year-old Osbourne, who publicly revealed a Parkinson's diagnosis in 2020, spent much of the show performing from a large throne adorned with a bat and skulls. Considered pioneers of early heavy metal music, Osbourne helped launch Black Sabbath in 1968, releasing 8 studio albums as its lead vocalist. Known for outrageous stunts, he infamously once bit off the head of a dead bat. He later said he thought it was fake. Okay. Osbourne was fired from the band over substance abuse issues in 1979. He subsequently launched a successful solo music career and eventually became a pop culture mainstay with the 2002 debut of the reality show Meet the Osbournes. If you never watched that, it's in syndication now. It's worth taking a look at. Saturday's show in Birmingham, England was preceded by hours of tribute performances from Metallica, Guns N' Roses, and others. Well, that's it for global news. Let's see what Wall Street has for us. U.S. stocks are falling today as President Trump made a fresh tariff threat and confirmed that country-specific duties will kick in on August 1st, ramping up trade uncertainty as the end of his tariff pause looms. Well, they can't say they didn't have plenty of time to strike a deal. Tesla stock is down almost 8% today. Investors are concerned about Elon Musk's latest foray into politics. Separately, Wall Street is growing concerned over the loss of EV tax credits and regulatory credits stemming from Trump's One Big Beautiful Bill. Over the weekend, Musk polled users on X about whether he should start an independent party called the American Party to challenge the government's status quo. Musk continued his complaints that Trump's bill would do nothing to rein in the deficit and offers little in terms of benefits to the American people. Well, I got news for you. He should actually read the bill. I know he's a real smart guy, but sometimes you can be a little too smart because you think you're the smartest guy in the world. Michael Saylor, on the other hand, just might be. According to Bloomberg, Michael Saylor's strategy, which trades under the symbol MSTR, Mr. as we call it, registered an unrealized gain of $14.05 billion in the second quarter due to a rebound in Bitcoin's price and a recent accounting change. The unrealized gain was partially offset by a related deferred tax expense of $4.04 billion, according to the company, and in a U.S. Securities and Exchange Commission filing today. This is the first week the company, formerly known as MicroStrategy Incorporated, has not purchased additional tokens since April. Strategy owns about $65 billion in Bitcoin, making it the largest corporate holder of the crypto, BTC. TikTok is developing a new version of its app for U.S. users ahead of an expected sale of the app to a group of investors, according to a report from The Information. The company reportedly plans to launch the new app on September 5th, while the existing app will stop working in March of next year. The timeline may shift according to those familiar with the project. Again, President Donald Trump blasted Elon Musk's bid to start a new political party, intensifying a feud between the former allies and deepening investors' concerns about implications for Tesla and other companies led by the world's richest man. See, sometimes having all the money in the world doesn't make you a king. From Reuters, Traders are set to make about $1.4 billion in paper profits from their short positions in Tesla. The company's shares slumped almost 8% in early trading after Musk's political move, which followed an open feud with Donald Trump over the president's tax cut and spending bill. Again, Elon, you really should take the time to read the bill. It's not a buyer's market yet for housing or house hunters, but the available inventory in some cities has jumped even higher than pre-pandemic levels, according to one report. Nationwide, the number of houses for sale is still lower than the pre-pandemic averages, but Realtor.com's May housing report showed that inventory levels rose for the 19th straight month and were more than 30% higher than the same period last year. And in places like Seattle, Dallas, and Austin, the number of homes for sale is more than 50% higher than pre-pandemic levels. It's because everybody's leaving California. Inventory in Denver is double what it was before COVID. Indeed, 22 of the top 50 metro areas now have more inventory than they did in 2019. Just wait till Jerome has to lower the interest rates. And you know what? Let's be honest. He may not. He may wait for his term to expire, hoping that his actions, while he's overbuilding a Taj Mahal for the Federal Reserve, which, as you know, has no government affiliation. It's a privately owned corporation. When President Trump's 90-day pause on U.S. tariffs ends Wednesday, once bitten, twice shy bond investors could take on more risk by adding high-yield bonds to portfolios, also known as junk bonds, rather than panic sell credit as seen after April 2nd's Liberation Day tariff announcement. That comment came from many fund managers and bankers. And last on Wall Street, President Trump warned Monday any will face an extra 10% tariff on exports. The threat, posted on Truth Social, came from Trump after the BRICS nations, which include Brazil, Russia, India, and China, and also South Africa, met over the weekend. The group condemned U.S. tariffs and military attacks on Iran. This latest warning from the Trump team comes as it continues to work to seal trade deals. Treasury Secretary Scott Bessent has said around 100 partners would likely see a minimum reciprocal rate of 10% come next week, adding that he expects a flurry of deals to materialize before the deadline. Well, that's it. For the Wall Street news, now we'll go to the local news. As you know, Logic 247 is on a hiatus as we hit 20,000 individual handcrafted alerts last Sunday night. 20,000. Yeah, it's a lot. And what we averaged over, I think it was 361 weeks, 20% or less of the alerts being stopped out based on simple market structure and a simple process we teach all of our passport holders. Now, long before we had and what is the future of Logic 247? I haven't decided. But as of today, it still remains on hiatus. Long before there was a Logic 247, we had the concierge trade alerts. That was our original alert service. Now, the CTAs are typically published 5 minutes before the Globex Open. We all know today's the Monday session, but it began last night at 6 p.m. Eastern. So 5 minutes before the markets opened, all of our traders and all of our trial members had all of these targets. The S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. So as we go through these individual markets and you see these targets drawn on the charts, just remember, our traders had these targets 5 minutes before the market opened. So now we can actually go to the charts. And we'll start where we always do, with the bellwether, the S&P 500 E-mini futures. As you can see, the step line has finally crossed blue and climbing. We talked about it all last week as it was starting to lean to the right. Now you see on the way up, you had price, you had the black step line, you had blue and climbing. When that step line crosses blue and climbing, price will typically retrace back to the BBC. That's the green line. Now, BBC simply stands for bull, bear, cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses above the green line, we're bullish and expect higher prices. Now, price always reverts to the mean. In our case, the mean is green. We call it the BBC. And as you can see, when price reverts to the mean, the pullback holds more often than it doesn't. Like it did there, like it did there, and there. Until finally on April 24th, we closed above the BBC, and the first pullback held, and the second pullback held, and the third, and the fourth. So this time, will it hold? We'll see. Now, as we pull back to the BBC, where should you expect potential support? Right there would be the first place I would start looking for it. And as we work our way down, right here, 61.49. Actually, we're already above that. 61.57. Now, these are the Fib retracements, drawing from the low of April 7th to the high of July 3rd. Over here are the Fib extensions. See, if price were to start moving higher, if you look left, you won't see anything because we've already overcome the all-time historic high. Right here. So now we didn't quite make it to the 62% Fib extension. Above that, you'll see the 100% Fib extension. Now on the way down, price could find support at the 38% Fib extension. And then we definitely expect support at the BBC. But keep in mind, eventually price will trade through, like it did February 21st, and like it did April 24th. So I'm convinced that this week, we don't have much news this week. Hardly any at all. The first high impact news event's Wednesday, and that's just the crude inventory levels. So as price works its way down, when we get here, be ready for a bounce, and then after the bounce, we could trade through it. Now, the daily chart is important. Why? Because institutional traders, the ones with really deep pockets, like BlackRock, like State Street, and many others, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Why? Has everything to do with account size. You see, the institutional traders, because of their account size and the size they trade in, well, they're the ones who actually move price. So I encourage you to spend 2 minutes with the daily chart of whatever you're getting ready to trade on the smaller time frames. Number one, it gives you a free look over the shoulder of the deep pockets that move price. Now we're slightly off the high of the day and we're slightly off the low of the day. We had an inside day going for a while, but we have taken out Friday's low. Now we've pulled back up to the 50% fib extension. We're sitting on top of that as support. We could see that same action as we get down to the 38% fib extension. So not only do you get a free look over the shoulders of the deep pockets, but you're able to identify where the market is likely to find resistance and support. And if you haven't yet learned the importance of being able to look at a chart and determine well ahead of time where the market is most likely to find major support and resistance, you need to get busy learning how to read the chart. Whatever career path you take, there's going to be books you have to read, journals you have to read, tests you have to read. But if you want to trade for a living, you got to learn to read the charts. There's no words, no sentences, no paragraphs, no punctuation. It's a completely different language. Now, no one knows what's going to happen next in the market. Not man, not machine, not AI, not nobody, not no way, not no how. However, once you learn to read the chart, you can know with a great degree of certainty what the next high probability move is. And what we proved with over 20,000, or with exactly 20,000 individual handcrafted alerts, is that 20% of the time or less, the market will actually do something other than the next high probability thing. So if you're chasing that holy grail where you'll never be wrong again, and I know a lot of places promise that. Trust me, they're just more interested in your money than you are. It's not possible. Getting stopped out is as much a part of trading as breathing is a part of life. So with that, let's go here. Now this is where all alerts are created. Okay, the concierge trade alerts and the logic alerts. That's where they were created. Now, I drew in these windows of opportunity. Last night, I posted them in the discussion group and the trial discussion group. They all have a timestamp. I added this 3-pointer this morning. And as you can see, it filled. The 2 points up here, that filled. Then it filled again. And this 2-point one down here, that one filled beautifully. We had a gap higher open last night. We hit the long target right away. Price pulled back to the VBC. Remember, price always reverts to the mean. And then we consolidated at the BBC, so this pullback actually held. You're like, wait a minute, there's candles below. But you'll notice they're all touching the BBC, with the exception of one right there. So if that threw you for a loop, well, you will get stopped out. From that support, which you see right here where the blue line got above the green line, that's called a bullish cross. When you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. And it was. Here, 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 all across here. Okay? Same is true of a bearish cross. If price were to start to rally, we would expect resistance at the bearish cross. That's when the red line gets below the green line. So the 2-point window of opportunity filled once, filled twice. You only need 2 points to get your goal for the day. The 3-point window filled twice. The 2-point window so far has filled once. So a lot of opportunity to get your goal for the day. Now look at this 2-point one. The vertical line separates today, Monday. Here's Friday, which was a short day. Thursday, Wednesday. On Wednesday, we had a nice 6-point window fill. But on this 2-point window, I had to Monday, Friday, Thursday. I had to go all the way back to Wednesday to create this 2-point window. But again, it filled nicely, and I got a feeling it just may fill again. The market loves to repeat itself. See, it filled, and it filled. Up here, it filled, and it filled. Now the horizontal lines, where the vertical lines separate the days, the horizontal lines are the weekly trading zones. For the last 15 and a half years, the weekly trading zones have been published 6:15 a.m. Eastern for all of our traders. When price drops to a weekly zone, we expect support until proven otherwise. And when price rallies up to a zone, we expect resistance until proven otherwise. So we spiked this zone from last week, but look where we closed, way back up here. Now, the reason you're seeing last week's zones, even though the new zones came out this morning at 6:15 a.m. Eastern, and once they're published, they're carved in stone for the entire week. Any alerts or windows that I put out on a Sunday night, they're a reflection of the previous week's zones. But anything I put out on Monday after the new zones are published are, of course, based on this week's zones. So tomorrow when you tune in, you'll see this week's zones on the chart. Don't want anybody to be confused, okay? So look at price. Where's it heading? Looks like it's heading lower to me for a number of reasons. The main one being we've got a bearish cross up here. And that will usually take price lower, like it did here. Now we found support, if you look left, right off this area here. Right here, yeah. It's market structure. It's part of learning how to read a chart. Here it comes, but we can't hang around to wait for it. We'll come back and look at it later. On the Dow, we had a gap higher open, and we filled a 30-point window. With the Dow, it takes 20 points to get your goal for the day. This was the gap higher open. This is where the market opened last night. But remember, our traders had these targets 5 minutes before the open. And this thing opened at 9:15 and ran up 85 points to the target. You only need 20 points to get your goal for the day. Now, when the market ran out of steam, or price ran out of steam, right here, right at the bottom of this window, right here. See this right here? The market was unable to overcome that resistance. Blue and climbing turned to red and falling. Down we go through the long target. And on the way down, we filled this 20-point target, or this 20-point window, this 20-point window, and we found support at last week's zone, 44,610/615. The Russell. We gapped higher on the open last night, hit the long target, pulled back to the BBC. much like the ES and the Dow. And we got a leg and a retracement, a leg and a retracement, and then a leg that hit the long target. And then on this candle, we filled the 3-point target there. And then we came on down to fill the 2-point target. You only need 2 points to get your goal for the day. This 3-point window actually filled twice. And this 2-point window may be about to fill a second time. We overshot the long target by just a little bit. Now, why did price stop there? Bullish cross. That's what the short target was based on. Monday. I don't think I put Friday in here, did I? The market closed, yeah, right there on Friday. Yep, there we go. So now here we come. We're filling that 2-point window for a second time, heading back to the short target in this major area of support. Monday, Friday, Thursday. That bullish cross happened on Wednesday. It's pretty cool. The NQ. We opened here, ran all the way up to the long target, pulled back. Now, we never did fill this window. That window was based off that market structure right there. We never came back to fill it. We did come down to the zone, found support, bounced this up into red and falling, which is resistance, which sent us back to the zone, which is support. Support sent the market looking for resistance, which it found right here at this previous swing high, but we were unable to take out the opening high. That's a sign of weakness. So, price, along with red and falling, gets through the weekly trading zone, and we fill the 20-point window. Now, in the NQ, 20 points is worth $400 per contract traded, and we're now filling the window for a second time. Haven't completely filled it a second time yet, but this was a red candle all the way down. $400 per contract traded. Crude oil. This was the open last night. We gapped lower. Okay. Then I drew in these windows. We gapped below the short target, and when we came back up, look where we found resistance, at the underside of the short target. I've mentioned this to you many times. Don't forget it. Then price came down and filled the 15-tick window, $150 per contract traded, and then stopped right at the top of this window. That bounced us up. We got above the BBC. We got a leg. We got a retracement. The pullback held. We came down and hit that short target a second time. And then we ran all the way up to the long target. And that filled this 15-tick window of opportunity. Then we filled it again. And then we didn't quite fill it again. But here's where we are now. And I think we're going to see substantially higher crude prices this week. Our highest weekly zone this week is $69.80. So that's $2 higher than where we are now. When the price of crude moves $1, that's worth $1,000 per contract traded. Now the short window, we filled it once, twice. And the long window, we filled it once, twice. So, gold. This was the open last night. Didn't really have a gap there. But down we came and filled the 2-point window, hit the short target, traded through last week's zones. Only one of three things happens when price encounters a weekly trading zone. 70% of the time it's going to be consolidation. 20% of the time rejection. 10% of the time the slice. That's when a 30-minute candle slices through a zone like it's not even there. When that happens and it runs out of steam, price will typically retrace back to the zone it sliced through and then continue in the direction of the slice. And then this 2-point window here got filled nicely, and then it got filled again and again and again. But we're heading higher. So we may be about to fill this 2-point window again. And if we keep moving higher, then this 2-point window will be in play as price attempts to get to the long target. And what do we got last here? Silver. Here's where we opened last night. We ran up and through the long target. With silver, it only takes 2 pennies to get your goal for the day. We opened at 37.15 and ran up to 37.43. But you only need 2 pennies. So this window hasn't been filled yet, but this short window filled once for 3 cents, twice for 3 cents, 3 times, and then this 3-cent window got filled once, got filled twice, and then this 4-cent window, which would be $200 per contract traded. It got filled, and it got filled, and it got filled, and we didn't quite get all, well, we did pretty much get back to the top of the window, but not quite. But then it filled again. And then we found support where? At the weekly trading zone that was published last Monday at 6:15 a.m. Eastern. Again, this week's zones will be on the chart tomorrow during this broadcast. But everything that goes out on a Sunday night is based on the previous week's zones. We're getting a bullish cross here. So silver may continue to move higher. But keep your eyes on this bearish cross right here. At about 37.11. If price does continue higher, that should be potentially good resistance, at least the first time up. But notice how the step line is hooking right. If the step line crosses to the right side of blue and climbing, then you should look for another move back down. And if price moves back down, yes please, be selling 36.66 down to 36.58. 8 pennies, $400 per contract traded. So that covers every market. And we're now dropping below that 50% fib extension. Potential support here, and then at the 38, and then the daily BVC. If we don't hit that daily BVC today or tonight, we very well may hit it tomorrow. Again, there's no high impact economic news until Wednesday. We get crude inventories, which typically only moves crude unless it's a huge hit or a miss. And then on Thursday, we do have some high impact news, and on Friday, I don't think we have any. Interestingly, the bond auctions, which are usually low impact, we have several bond auctions this week, and they are labeled as high impact for reasons I mentioned in that news article I shared with you earlier. Michael should be here in a few minutes. If you've been on the trial and you're ready to become a member, go to mytradingiq.com. Make sure you watch the videos, read the content, And then when you're ready to actually become a member, send an email to support@cfrn.net. In the email, simply say, I want to become a member. Valerie's going to send you an email in return that explains everything it means to become a passport holder. Now, if you happen to be a veteran, in your email say, I'm a veteran and I want to become a member. Because the email Valerie sends you will be chock full of information, but it will also have a link that you can click to seal the deal. And if you are a veteran, we want to thank you for your service by giving you a discount. So let her know in your email so she knows which link to send you. 9 out of 10 new traders fail. Now that's an enormous number. Imagine if 9 out of 10 would-be doctors failed, or attorneys failed, or pilots failed. Even the Navy SEALs, arguably the toughest job on the planet, they don't have a 90% washout rate. So when Futures Magazine published this article back in 2006, they gave the statistics, but they didn't explain why. I embarked on a mission to find out why. It didn't take me long to figure it out. People did not have anyone to teach them how to trade. So Michael and I made a commitment. Once we get this thing figured out, we're going to create a place, a family-friendly place, where people can come and actually learn how to trade. Now, we made that commitment way back in 2006. CFRN launched in 2005. Michael and I made that commitment in 2006. And the live training room, as you currently see it, has been in existence since 2008. You get 2 hours of live interactive training every trading day, along with group training. You get private one-on-one mentoring, strategy you learn, the indicators you own as a passport holder are fluid across all markets, all time frames. Get the concierge trade alerts the second they're published. You get the weekly trading zones every Monday morning at 6:15 a.m. Eastern. And Thursday afternoon, you get an invitation to attend the members only workshop every Thursday night at 8 p.m. Eastern. And that fellow you hear in the background, that would be the Michael that I spoke of, who would be showing up shortly. He's going to give us a recap of what happened in the live training room this morning, and then do some live trading on the TradingView platform. Then I'll come back. We've finished all the markets, so I'll wrap things up with our good word for the day when I come back.
All right, here we go. Here we go. All right, should we look at my screens?
And they look most handsome.
Excellent, excellent. That's what I was going for.
And your audio is great too.
Good. Good. I'm optimistic that that internet thing was causing the problem. All right. Here we go. Good afternoon, everyone. Today is Monday, the 7th day of July, 7/7/2025. If you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button. There is no credit card required for this trial. Just click on that purple button, and it will bring you to this registration page right here. All right, just fill it out. Give us your first name, last name, your email, your phone number down here at the bottom. Give us your TradingView login ID. If you don't have one of those, if you don't have a TradingView login ID, then click on this link right here and go get one. Right, they had a super sale over the weekend. They'll probably have another one on Memorial Day at the end of the summer. But they had a super sale over the weekend. We can get it for 70% off, but you're a little late for that one. So if you do sign up for it, sign up for the monthly. Don't sign up for the annual. Sign up for the monthly because they'll have another annual sale in a few months. All right, hit the register button. Once you hit that register button, actually the first month of that will be free anyway. So sign up for the monthly for sure. Once you hit the register button, we'll know that you took the trial. All right, we'll send you all the stuff you need, get your indicators indicating on your desktop. Okay, and this is today. In spite of everything That didn't happen today because the markets were kind of slow and flat. We ended up with a pretty good day overall anyway. I just want to check something on this. PE times 5. Okay, just want to make sure that that number was right. This E times 5, G times 5, K times 10. Okay, and O times 12.5. C is C at 12.5. That must be soybeans. Okay, and O times 12.5. That's good. All right. Just make sure the formula was right. Because, well, we had a pretty good day today. I mean, we're up $655 a contract. It wasn't as good as Friday or Thursday, but it was still good. We're up 161 ticks on the NQ. We're minus 20 on the Russell. We had one winning trade on the Russell at the very end, that last one. We were up 20 on gold. We had 2 winning trades on gold. And we were minus 20 on the ES. We had 2 stop outs on the ES and 2 break evens. Put us at 655 in the morning session. Today it took 23 minutes, a long time, and 4 trades to get to the goal for the day. At that point, we're up $2,500 with 10 contracts. So I took a total of 19 trades. So it's a slow day this morning. I think this week is going to be slow. So if you're in here right now and you're normally in the morning session, you're going to want to get your goal early on, okay? As quickly as you can in the morning, like 9:27 to 9:30, because we really have very limited news the rest of the week. And I think we only have 1 high impact news event this week. And next week we have a whole bunch, but this week, very light news. Anyway, so on the month now, we're up $2,952 over 4 business days, averaging $738 per contract per 2-hour business day. On the year, we're now at $158,417 per contract per 2-hour business day. And so with that, we're averaging $1,401 per contract per 2-hour business day. Now, doing the 24/20 blueprint, which means you quit trading when you get the goal for the day. That means you quit trading when you're up $100 a contract. And adding 1 contract per month so far this year. You'd have only had to work 14 hours and you'd be up just about 14 hours and you'd be up $67,487. You'd be trading 7 contracts right now because we're in the 7th month. That'd be up $67,487 per contract, averaging $4,837 per hour. That's the gross number. The net number, $65,117. That's taking out the 948 round turns you would have traded. I think that number includes this. I'm just making sure that number is right. We're talking about Y, right? Y, yeah. Okay, yeah, so this is the number of round turns right here, right? This is the number of trades. This is the number of round turns. So that number is right, okay? So your net per hour would be 4,667, and your net total would be 65,117. So you're only giving up, if you had the same rate as me, the 948 round turns, you're only giving up a couple $1,000 in commissions. Not too bad. It's gotten a lot better over the years. All right, so let me shut that off. Shut that off. Here we go. I'm going to here now. All right, so what I wanted to do in here is just get into the trade setup. So I'm going to start out with the gold. We only had a couple of trades on gold. So on the gold, where were they? There was one, and we had 2 there. One right here. I got plus 10 on that one and plus 10 on that one. Those were the 2 trades I managed to take on gold. And I didn't miss a lot. You know, there were a lot of them where the retracement was just too deep. Okay. Yeah, a lot of them where the retracement was just too deep. Now, one of the things that I did last week, some of you guys may have noticed it or may not have noticed it, but I came in here and I shut off the upper and lower retracement lines. So you're just looking at the midpoint. Okay, it gives you a little bit different look when it's pulling back to the midpoint and you're above it, you're above the YBR, it's pulling back to the midpoint. Because the midpoint shifts around on you based upon what happens with the pullback. If the pullback goes over 100%, then the midpoint shifts around on you, as you can see. And again, the midpoint is based upon when it comes out of the overbought or oversold, depending on what direction you're going. So just wanted to point that out to you guys. Anyway, those were the two trades we took on gold. If we go all the way through here, we say above here, you only look at the long trades. When price bounces off the midpoint and comes out of the oversold. So I guess there would be one. It'd come out of the oversold on the down close right there. So not one there. Maybe looking for the other way. Nothing in there. Now back to the long side. Right here would be one. Right here would be one. Both of those were during the break. See, the midpoint wasn't at the bottom right there. When you got that up close, it hadn't hit the midpoint. I would have said wait for a pullback and take it there. If you did that, then you could have gotten it. And right here, you got down too low. I wouldn't want to take that. It would have worked out if you did take it, but I wouldn't want to do that. Anyway, that's what it looks like today. All right, we were up 20 ticks on the gold. 20 ticks on the gold. And again, to put those retracement lines back on, you just do that. All right, now the Russell. The Russell kind of had our number in the beginning. Go all the way back to the beginning here. We stopped out on this one. We're at minus 15 then. And then we actually stopped out on this one too. That should be red. After that one, we were at minus 30. And then it was at the end of the session. I guess I didn't put it in there. But at the end of the session, we had a short in here somewhere that we took. It was right here. It was this one right here. We got 10 ticks profit on that. Right, so we went from minus 30 to minus 20 after that trade right there. Now, again, if we go in here and we shut off retracement lines, it gives you a little bit different look, right? When you're above, you're looking for it to bounce off the midpoint when it comes out of the oversold, right? Clearly, there was nothing right there. You were below it here, so nothing there. Then it got down below the YBR here, so you had a trade right in here you could have taken, right? That actually did bounce off it, but the midpoint pulled down to it after it closed. All right, so you really didn't have anything in there. And that was it. We really didn't get a whole bunch there on the Russell. During the break, if you just go through this sideways action right here, could have taken that for a little bit right there. This one right here for a little bit. This one right in here for a little bit. Then it flipped around. Could have taken that and that. And nothing there. And nothing really there. Right, and that was it for the Russell. We ended up with minus 20 on the Russell. Okay, now the ES is next. The ES kind of had our number today too. Remember the last month or so, we were saying this number right here is what we're looking for price to get up above. This was a gap we had to fill when the news came out on Thursday morning, I think. But this was the all-time high right here. Right, so we got way up above that, and now we're back down a little. Okay, so let's go back to the beginning here on the ES. Sorry, going back and forth on you right here. Here we go. On the ES, we started out with a break even on this trade. That was our first trade of the morning, I think. We started out with a break even on that trade. Then we had a stop out, minus 10, another stop out, minus 10. Now both of those look like they went enough to get the stop to break even, but that one only went a couple of ticks from my entry, and that one only went a couple of ticks from my entry. So they're both valid trades, and I just stopped out on both of them. You can see we don't have the bottom line on here, but if we go in here, we take the top one off again. The upper retracement line. And you're just looking at when it pulls back to the midpoint and comes out of the overbought or goes into the overbought, either one, when you're below the YBR. So there's another one right here that would have stopped out. Given that information, there's another one right there that would have stopped out. They just were not a ton of trades today. Not a ton of trades. Could have taken this down close right here for a little bit of profit. This down close right here for a little bit of profit. This down close right there. This down close right there. That was all during the break. This up close right here. Probably a little bit break even. This down close right here. It flipped around and the up close right there. And right there. So there were some trades here during the break on the ES. It wasn't bad during the break here on the ES. Maybe we'll get a couple right now. Who knows? Minimize that. And we'll come back here to the NQ. Now, the NQ is where we made the majority of the money today. We had quite a few trades on the NQ. We did have some stop outs on the NQ also. Okay, so here's the beginning of the day. We didn't have anything right there at the beginning. Then here, I believe, is where we got our goal for the day on the NQ. Picked up 45 ticks on this trade right here. And then we picked up 18 or something like that on this trade. Goes up to 53, and then from 53 to 73. So we got 20 on that. We got 8 on that to get us to 81. Then we got, I don't know exactly what we got, 41, I think, to get us up to 122. Then we stopped out and brought us down to 97. Then we got back up to 113, and we had a break even. Then we went to 158, and then we stopped out again down to 120. And there was one more trade here, one more 45 tick trade. Oh, this might be it right here. And right there, we picked up another 45 ticks, and that got us up to 161. And that's where we ended up with the NQ this morning. Okay, so the NQ was giving up a bunch of trades. It was pretty easy to trade most of the morning. We did have some stop outs, but that's known to happen. All right, so for anybody who's just signing on in YouTube, if you haven't taken a free trial, go to mytradingIQ.com. Click on the purple button right here. There's no credit card required for the trial. Just click on the purple button. Fill out this form. Give us your TradingView login ID down here. If you don't have one, click on that, watch the video, get your ID, and then give it to us. Okay. All right. Back to trading. So, what we're going to be waiting for, let me just describe the situation to anybody who doesn't know what's going on. This yellow line right here, we call the YBR. When you're above the yellow line, you're looking for long trades. When you're below the yellow line, you're looking for short trades. All 4 of these markets are above it right now, so we're looking for long opportunities. What that means is this black thing right here is the midpoint between the last time it came out of the oversold and the current high. Right, the midpoint between last time this down here, the range trigger, the TV trades range trigger came out of the oversold and the current high. That's the midpoint between it. Right, that's the best place to take a trade. You want price to pull back there, hit that, and bounce off it. Give you a trade opportunity, add it right around it. Right, that's what we're looking for on every one of these. That's what we're looking for. Okay. Let me spread the NQ out. The NQ is on a 19 range. We're in the oversold right here. You could actually go long aggressively on the NQ right here if you wanted to, because it closed right here at the midpoint. But you might want to wait for the up close to get the conservative trade right here. If we get an up close on this bar, there'll be a conservative trade also right there at the midpoint. Okay, so we've had up close. There was a trade back here, but now there's about to be another trade right here. I think if we get an up close on that right there on the NQ. Over here on the gold, it's going to take a couple bars to give you a trade. You can have a down close on this one that'll get you halfway down to the oversold, and then down close on the next one will put you all the way in the oversold. Right? Then you can look for a trade after that. There is the up close on the NQ, and it's right there at the midpoint. That up close is right there at the midpoint. So it's not a horrible place to take a trade. It's a pretty good place to take a trade. All right, I'm going to take it, and 2.5 points. We bump the stop to break even. 87.25, let's get up to 89.75, and there it is. So now we're going to lock in 1 point on this, 2 points on this, it should make it up here to 97, 897 right now. 3 points, 4 points, 5 points. That's $1,000. And we're out. 5 points on the NQ. All right. Did you all see how that came together? We have something similar happening over here on the gold right now. Those 5 simple points right there on the NQ. All right. Something similar over here right now. If you get a down close on this, it's going to be right at the midpoint. If it happens to give a down close right here at the midpoint and goes into the oversold at the same time, that is a great place for an aggressive long trade. And I'll take that if it happens. right? See how that was below the midpoint when it went into the oversold? It's not the great place for the aggressive trade. You gotta wait for the conservative trade on it. And actually the conservative trade is gonna be kind of tough to take here too, because you're gonna be too far below the midpoint. Do you all follow my logic on that? And you're all just watching me do the same thing that I do every day, over and over, right? We need a down close here on the gold. Down close on the gold will be a trade. We're not gonna have a trade here on the NQ. We're at least 2 bars away from a trade on the ES and the Russell. At least 2 bars away. Okay, you see this gave an up close when it came out of the oversold. It's gave an up close right there at the midpoint when it came out of the oversold. Not the ideal trade. Over here on the Russell, we didn't actually make it into the oversold. It gave an up close, not a down close, and it didn't go into the oversold. So we don't, not the Russell, the gold. So we don't actually have a trade there on the gold. Now a down close on this bar is just going to mess things up a little bit. We had a chance for an aggressive long trade there, but it just didn't work out. It didn't come together right. Okay, you all follow me on this? The reason it didn't come together right is because we got an up close instead of a down close. If we would have had a down close right here at the midpoint, that would have been an aggressive trade. Now we got a down close here, and we're still not in the oversold. So it messed everything up over here on the gold. All right, over here on the NQ, an up close right now would be right at the midpoint, and that would be a place you could trade. We do have lower highs right now. So the market is weak right here, but it would qualify as a valid long trade. If you want to jump it, then you can. It could be right there at 89, I believe. It's got less than 7 points in it. All right, you're risking 6.5 to really make 5. So it's up to you. Let's see. The one good thing about this is the pullback is smaller. All right, there it is. The pullback is smaller. That's one good thing. So we should have, if we get another leg up the same size as the last leg up, then this should be okay. All right, but I would be looking for to get up here to 895 max right now. At least to start out with. It's got a little extra added risk because of the way it came together. Okay. You're in a triangle. You have higher lows and lower highs right here. And you're right at the apex of the triangle. So you can be really right or really wrong. One or the other. We didn't come out of the oversold over here on the gold. If it would have given us a down close on this bar, then it would have been part of that move up. But it didn't give it to us. Okay. And the ES and the Russell just didn't give us a thing. Okay, the NQ, if you did grab the NQ, you should have your stop at break even at this point. Four more points. Okay, so we get a down close on this. It's going to be in the oversold. It'll be below the midpoint. That went up above the midpoint. On the smaller pullback, went up above the midpoint. Broke out of the triangle on the upside. Now, is it a head fake to the upside? Yeah. I don't know, but let's look at it this way. Let's crunch this up and see what's going on in the bigger picture right here. Okay, now earlier when this was happening in here, Dwayne was saying on the ES, it was looking like we were going to have a big move down, a 3-point move or something like that on the ES. Probably bigger than that. But when this was happening in here, and so the NQ followed, NQ went with it anyway. But what it's done since then, we've made a move down, did a 50% retracement here, made a move down, didn't put in a lower swing, so we have a higher low. Came back up here, did a double top, went back down, did a double bottom, and now it's going back up to the double top, it looks like up here. Make a triple top, maybe. This is a 50% retracement right here of this leg down. Right there is a 50% retracement of that leg down. That's bigger picture stuff. Yeah. Just trade what's in front of you and you usually be all right. Let's look at the big picture stuff on the ES. Same thing, right? Let's see if it's doing the same thing pretty much. It is. It's on its way up here. Okay, this was the big leg down. 50% retracement. Failed to put in a lower swing. Came back up. Went through it a little bit. Went back down. Got a little lower than that, but it's a whole bunch of wicks down there. And now it's headed back up to here, I would think. 81. Right? That's what the S looks like. And I'm just going to skip the Russell because it does its own thing. But look at the gold. Gold has been on just a pretty steady march since the open. Up. Right. Now, when we got that big move down in the indices was right in here. We got the big move down in the indices. So I haven't looked at crypto today. They were going up over the weekend. Let's see. Crypto today. Bitcoin's down a little bit. Ethereum's down a little bit. XRP's up a little bit. Stellar is up a little bit. It's down. Chainlink's down. Okay, so crypto's pretty stagnant right now. Just wonder why all this money is going into gold and not somewhere else. All right, so right here on the NQ, we had a gap down to the midpoint right there. All right, now that is not a place to be aggressive. You want to have the up close off the midpoint where it pulls out of the oversold. The ES is not a place to be aggressive either. We just got into the oversold. It's nowhere near the midpoint. Same thing with the Russell. It's nowhere near the midpoint. Okay. See, waiting for that pull out of there, the conservative trade to pull out of there. Give you a shot. Okay. Nothing. Nothing you want to do with that right now. This one either. See, they're all changing. They're all shifting the bottom as they come out of the oversold. It's shifting the midpoint because the midpoint changes from here to here. All right. Does anybody have any questions? Ron K, you're in here, but you're not in the morning session anymore. I guess you had a couple weeks of that, right? You did get the email, right? Tell me what it takes to become a partner. All right, so what I'd like to see here on the ES is this go sideways, a down close on this one and a down close on the next one. Or at least a bounce off the midpoint on the next one. I doubt it's going to happen, but that's what I'd like to see. This is kind of what I wanted right here. Now, if we hit it and we have an up close, this would be great on the ES. This is a nice retracement of this whole leg up right here. That's what it's looking at. The last time it came out of the oversold where it just went back in, that's where the midpoint's coming from. On a pullback right here, I'll go long. right? The reason I say on a pullback is because the entry, I mean the close, it never actually hit the midpoint. It got close to the midpoint. Right. So the pullback will put my stop down below here. Okay, down below the midpoint, where the midpoint was. So right in here is a good spot to enter. Okay. So now my stop's all the way down here. Looks like it's going to hit it anyway. Well, we'll see. I had another one that lasted a really long time this morning. It ended up stopping out just like that. So I'm just not doing it on the ES today. The NQ, if you had another shot here at the NQ, that'd be great. So far, we've had 2 good trades. I guess both of them on the NQ. We had a 4-point and a 5-point trade on the NQ. And we just had a -10 tick, or -2.5 point on the ES. All right, so this is below the YBR now, so we're shorting opportunities over here on the NQ. Everything else is still above the YBR. Okay. And looking for the up close here on the NQ. Get that up close, we'll have an opportunity to sell.
So what I miss?
Well, we had 1 stop out on the ES and 2 successful trades on the NQ.
Awesome.
That's about it so far. So we're waiting for a little bit more to happen. During the break, the ES had some pretty good stuff during the break, and the NQ did too, but the other markets really didn't.
And yes, I think it's getting ready to fall off the cliff again.
Yeah, that's what I was saying earlier when you said that before we dropped. I was showing everybody. Blow it up like this, crunch it down. You had said that earlier, right about here, that it was ready to fall off a cliff. And it did a 50% retracement of that leg down, which was good, but then it didn't put in a lower swing, so it didn't continue the down trade, came back up, pretty much double top right there, and a double bottom right there. And it didn't make it back up to give the double top in there. So now it's probably going to go down and try to test this area.
That right there is a sign of weakness, the fact that it couldn't create the double top.
Yes. And it's
kind of a head and
so we have lower highs. Yeah, we have lower highs right there. It's a little messy. Yeah, you could say this is the head and this is the shoulder and this is the shoulder.
Yep.
Kind of weird shaped head and shoulder, but the neckline would be right down here. So if we drop through this, then we'll probably drop through this, is what I would think. But for right now,
I'm thinking we could see the daily BBC, if not tonight, if not today, tonight, and if not tonight, tomorrow.
Let's look at the daily. I haven't looked at that yet today. Here's the daily. Wow, the daily BBC is way down there. That's a ways down, 147. Well, it could happen. It's 120 points down.
We're already below the 50% fib extension, and then we got the 38, and then we got the BBC. So,
well, if we do get down there, that would be a great buying opportunity.
Oh, absolutely.
And I had said that somewhere the other day. I might have posted it yesterday somewhere. Let me see. Here it is. I think. There, look at that. Right there. And that is what I was thinking down there. It's just a matter of time. But that and that We went through the spot to all-time highs. Now it comes down to technical analysis, and that's all we got to work with now, is technical analysis. And that's what that would be. Down to the BBC, that'd be a great opportunity to be buying calls, buying anything that is we're expecting the market to go up. But yeah, tomorrow I think. I mean, I don't know. It's gonna have a catalyst. Something's got to go bad for it to go down that
But the
fast.
fact that the step line is crossed blue and climbing, it's just a matter of time, I think.
Do I have that in there? I do, right there.
Yep.
There it is, right there. Yes. Actually, a lot of times what it does, it will go down and then pull back up to that combination, the step line right there, and then shift down. But
Yep.
But yeah, I agree. I totally agree with you. All right. Well, it is 1:31, so I got to wrap it up. We had a couple of trades in here, a couple of good trades, one bad trade. It works out, and we ended up positive overall. But we did get a pullback down here to the midpoint on the gold. It did come off the midpoint right there on the gold. So if I was watching that, we had a decent trade there. The one stop that we had was on the ES, and that I believe was right in here. It ended up stopping us out, and we had two positive trades on the NQ. So if you haven't taken a free trial with us, go here to mytradingIQ.com, click on the purple button, no credit card required for the trial. Go here to the registration page. That's where it's going to bring you. Fill it out. Right down at the bottom, gives you TradingView login ID, so we can get your indicators indicating. Okay. All right, that is it, guys. With that, I am going to wrap it up and send it back out to fabulous Phoenix, Arizona, in Studio A overlooking South Mountain, America's largest city park. Dwayne is ready.
Yeah. Recap of the morning session.
Today it took 23 minutes. That's a long time.
Yes.
23 minutes and 4 trades. Yeah. 4 trades to get to $2,500 for 10 contracts on.
Good job.
Considering last month and the whole month, we only traded 87 minutes. We traded 23 today. And we had a week off last month. All right.
Okay.
That is it.
All right, guys, we've already gone through every one of the markets. So, just real quick, I'm going to show you what my daily chart looks like. And because we're scaled a little bit differently, hitting the daily BBC looks a little more likely. Now, we're sitting right on that 50% fib extension. We were below it, but we're a little bit off the high of the day. But if we continue down, there's the 38% fib extension. And then the daily BBC, which is currently at 61, we'll call it 57. Should probably write that number down, because that should be very good support. However long it takes us to get there. On the ES, that 2-point window we were talking about earlier, fill once, fill twice, and may fill again. Now the step line's starting to angle to the right. So if it crosses red and falling, we may get a pullback to the BBC. But we fill the 2-point window twice. We fill the 3-point window twice. We fill the 2-point window twice. That's on the ES. On the YM, the Dow, the 30-point window got filled twice. This 20-point window got filled, and this 20-point window got filled, and we found support at last week's weekly trading zone. And notice here also, because we're consolidating sideways, that black step line is about to cross, or is trying to cross red and falling. If it does, then look for a rally back up to the BBC. Keep in mind, this is on the 30-minute chart. The Russell, we filled the 3-point window couple times. The 2-point window we filled a couple times, and we found support at the short target. The NQ, we did finally get that 20-point window filled once, twice, and if the step line doesn't cross, we may just fill it a third time. But again, see, we already got another retracement back to the BBC. See the pullback hill. Pullback hill. Pullback hills more often than not, in case I haven't mentioned that. crude oil. Our short window filled once, our long window filled twice, and now the step line is crossed, so crude and blue and climbing is directly above price. So that's potential resistance. We should see a retracement back to the BBC, which is currently on the 30-minute chart at 67.23. This should be good resistance here. So we take out that low and bang, we're at the BBC. Gold, we filled the 2-point short target twice, and then we filled this 2-point short target twice, actually more than that. And we're trying to climb up to this long 2-point window and the long target. If gold rises, equity should fall. Now, that's the way it was for many, many years, and then we went through a period where that wasn't so much the case. But it seems like the markets have returned to that pretty reliable movement. And then on silver, man, it only takes 2 pennies to get your goal for the day. We filled, and we filled, and we filled. Then the 3-cent window we filled, and then the 4-cent window we filled, and we filled, and we filled, and we filled. Goodness, good day for silver. Hopefully we can continue higher. If we do, watch this bearish cross right here as potential resistance. We'll call it 37.10. And now we can wrap it up with a good word for the day. Try harder, try longer. Galatians 6:9. Let us not grow weary while doing good, for in due season we shall reap if we do not lose heart. One of the greatest predictors of success in any endeavor is persistence. It's not only how hard you try, it's how long you try. We tend to overestimate how much we can accomplish in the short term. And according to an American pastor and author, we also underestimate how much we can accomplish over the long haul. Why? Because energy is exponential. The harder you work and the longer you work, the more it pays off. In a study involving Japanese and American first graders, kids were given a difficult puzzle to solve, while researchers measured how long they would try before giving up. On average, the American children lasted 9.47 minutes. The Japanese children lasted 13.93 minutes. That's a 47% difference. Want to guess who scores higher on standardized math tests? Success in any endeavor is a byproduct of trying harder and trying longer. There are no substitutes. There are no shortcuts. It doesn't matter whether it's athletics, academics, music, math, ministry, trading. Mastering a craft or skill takes years of daily consistent practice, commitment, and perseverance. Are there any God ideas you've given up on? Any God-ordained passions that you've stopped fighting for? Any God-sized dreams gathering the dust of disobedience? Don't give up on them. You need to try. Then you need to try harder. And then you need to try longer. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.